Well, good morning and welcome to 2026. Great to be here with Dr. Steve Garth, again as the chairman of our investor committee. How are you, Steve?
I'm very well, thank you, Nigel, and Happy New Year to you.
Yeah, very happy New Year to you and everyone listening in. Now, today we're going to have a market review for the last year and the last quarter, and it was a really interesting year. We had a lot going on, tariffs, trade wars, interest rate movements, world war, not world wars, but wars around the world. So, Steve, a lot to talk about, a lot to reflect on, and a lot to review.
You know, there always is. In the end, Nigel, the returns for the year are really good, but boy, they've come with some wobbles. Have a look at the chart here. This shows the Australian stock market, the ASX 300, and the US stock market for comparison, the S&P 500. And you can see that they're quite closely correlated for most of the year. Look at that big dip in early April. That's, to your point, all about tariffs. But then tariffs went on pause and markets took off. And in fact, they continued to take off, hit new highs actually by the end of October. And then the wobbles kicked in November, really based around some fairly weak US economic data and also some inflation data. And you can see this diverging fortunes between the US market and the Australian market. So by the quarter, Australia not too good, -1%. But, you know, over the year, Nigel, Australian market up 10.3%. And that's actually higher than the long-term average, so not a bad result. The US, man, once again, for a US investor, they're up 17.9%. It's like the third year in a row of these 20% or close to 20% returns. So that's done extremely well. But all in all, good returns over the year.
Yeah, I think most investors were pleasantly surprised to see their returns at the end of the year, given the volatility in sort of politics and other events. One of the interesting things towards the end of the year was a bit of a shift in the bond market and therefore interest rate expectations going forward. Do you want to delve into that a little bit deeper?
Yeah, look, what I show here, it's actually a very similar chart, but this is Australian 10-year bond yields and US government 10-year bond yields. And they're similar in the sense that it's quite tightly correlated. They move together. They have done for years. But look at the last quarter. There's this diverging fortunes between Australian yields and US yields. In this case, Australian yields have shot up, where US yields are kind of flat line. Now, when yields go up, bond prices go down. So no surprise that for Australian bond index, it's got a negative quarter, sort of a fairly average return. But for global bonds, which of course in our portfolios, it's a really good return, 4.7% over the course of the year.
Yeah. So interest rate here, the markets are saying interest rates could go up. In the US, they've got a very strong leader who's perhaps impacting markets a little bit and controlling the rates a little bit. But for investors with term deposits, that's a good outcome. For those with mortgages, not such a good outcome. We're not here to predict, but by indications, it looks like, if anything, interest rates might go up this year.
Yeah, you're absolutely right. You know, the chart we just had up of bond yields, that's the best indication we have of what we expect interest rates to do. Look at the chart here, Nigel. It's the story of interest rates in both Australia and the US since 2021, when interest rates were zero. Remember that. Now, of course, they shot up in early 2022. US went quite high and quite fast. And Australia a little bit slower off the mark, not as high. Probably not a surprise then that we've come down a bit slower. But that's what interest rates have done. The bond yields are reflecting what they think interest rates will do. And really what they're saying, to your point, is that do not expect another interest rate cut in Australia. Markets are predicting that interest rates here will be on hold for most of this year, with the next movement up. On the other hand, in the US, the markets there are predicting that it's still kind of a little bit of a wobbly economy. They're expecting a cut this year, maybe two, and maybe one next year. And to your point, if Donald Trump has his way, we might see a lot of cuts in the US. So it is a story of two different markets and two different expectations.
Yeah, very interesting. So I think it might be worthwhile. We've seen some of the market returns. Might be just worthwhile looking at some of those numbers and also how our diversified portfolio sort of ended up at the end of the year. And then we can touch on, what's happening right now in markets.
Yeah, look, it's a really good point. I mentioned at the start that it's a pretty good year. And, you said that as well. Investors are probably surprised at how good the year is. Let's have a look. This chart shows our major asset classes in equities. Australian market we talked about, up 10.3%, pretty good. In the developed markets, for an Aussie dollar investor, up 12.5%. mainly driven by that strong US market, but that's still an outstanding result. Hedging's even better. If you hedge back international equities, it's even stronger. And emerging markets, which have been a bit of a laggard for a couple of years, they're actually up 24%. So all in all, for a diversified portfolio and for a disciplined investor, it's been an outstanding year.
Yeah, and I think one of the things we'll be talking about with all our advisors is that discipline to rebalance. We have
Right.
sensible returns, making sure that the asset allocation remains appropriate, and this is a good time to rebalance. We never know what's around the corner. I think a good lesson for investors is we had a lot of noise last year and markets were really strong. I think people are now seeing, we've just seen another little bit of tariff movement and then suddenly Trump back down overnight and the markets were up, down, seeing that again. So this is very similar to the start of last year. And again, to realise that markets will do their thing. Don't worry too much about one individual in the world. You've got to stay diversified, stay disciplined, stick to your guns around the asset allocation and things will be okay.
Yeah, really good points, Nigel.
Well, thanks, Steve. Really looking forward to working with you again in 2026. Let's hope it's a great and healthy and prosperous year for everyone. And let's see what happens in markets. It'll be another interesting year.
It's always an interesting year in markets. Thanks, Nigel.
Thanks, Steve.